All right, this is a stock on which I just broke even. And by the way, this was a mistake. I mean, I should have never bought this stock in the first place. I will tell you what mistake I made, and I encourage you not to repeat that mistake. Okay, so let us look at where did I buy the stock, why did I buy the stock, and things like that, and we'll see what how I messed up here. So the yellow line is my buy price, the red line is my stop loss, and this is the base. So I bought on this day, which is 24th of July. So let me put, okay, so this is what I saw on the day of the, just one day before the breakout. This is what I saw. Okay, so let's draw the base. First, let me show you the moving averages. The 50-day moving average is above the 150-day. The 150-day is above the 200-day. So it is a nice stage 2 uptrending stock. So that means I'm interested in the stock. Looking at the base, see, this is 0.1. This is 0.2. That's 0.3. And that's 0.4. See, I need minimum 4 points in the base, which means 2 corrections in the base, which is what I have here. Next is after this candle, I start counting from here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So there are 10 candles in the base, which means 2 weeks of consolidation. So I am personally looking for 2 weeks of consolidation, which is 10 candles, and 4 points in the base, which is 2 corrections. Okay, and the moving averages. This much criteria is enough for me to buy the stock. But see, one thing I overlooked here, I was not concentrating. Maybe my mind was in something else. But see, one thing I overlooked here is after 0.2, there is no price action in the blue zone or the green zone. The green zone is the upper quarter. The blue zone is the second quarter. Okay. And the red zone is the lower half of the base. Okay. See, after 0.2, there is not a single candle which has closed in the blue zone. Forget about the green zone. That question never arises. We have not even breached the blue zone yet. Okay, that's a red flag. Okay, number one. Number two, the buy point is in the blue zone, not green zone. That's another red flag. Now, if the buy point is in the blue zone, I want at least 6 points in the base, like 3 corrections in the base, so that it will give me good confidence to enter the trade. If the buy point itself is in the blue zone, not the green zone, plus I have only 4 points in the base, okay, that's like 2 negatives. Okay, I'm not saying the stock cannot go up from here. The buy point is in the upper half. The stock could go up from there, it could double from there. But what I'm saying is the probability that the stock will go up after such kind of a move is less, because you're buying it near the midpoint of the base, not in the upper quarter of the base. Okay. And the right side of the base is not properly developed. I want the stock to go up. Say, for example, I want the stock to do like this: 0.1, 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8. This is the kind of price action that I would like to see if I choose to hold on to the stock for a longer period of time. Okay. And that is not what I see here. I got into the stock too early, and look what happens. Let's go to the next candle. See, I place my order at the yellow line, which is the high of this candle. My stop loss is here, which is 8%. My position size is 2.5%. My order gets triggered, low volume breakout. Okay, so I end up selling. I think I sold half there. I don't remember now. Or maybe I didn't sell anything. There are so many stocks, I don't remember what I did. But I do remember that I came out at break even in this stock. Okay, next. Again, no volume, price not moving anywhere. See, this is not how a stock should behave. A proper breakout stock is a stock which just comes out of the gate, crosses the yellow line, never comes back to the yellow line. It continues to go up. That's a proper breakout. Okay. That is a stock in which there is a good chance that you will make good profits. Here, the stock is wiggling. Okay. The stock is dancing around the yellow line. So it's probably not going to give you much gains. see what happens. Then falls back into the lower half. I hold on to the shares because the volume is low, the institutions are not selling. So I hold on to the shares, or maybe I sold half on that day. I don't remember in that moment what I was doing. But see, there is some encouraging price action here. Oh, now it goes into the green zone and crashes back. Okay, so bearish engulfing pattern. Definitely, I should have sold something here, but since the volume was low and it's still above the yellow line, I said, okay, let me see what happens next. So it pulls back, comes down again. Now I am really started. Now I have started to lose my patience. The moment these two candles come, although the volume is low, I began to lose my patience, and somewhere here I got out. Now I will tell you why I got out here. This is a pullback, by the way. Look at the closing here and look at the opening here. This is called as a bull separating line. If you understand candlesticks, okay, that's a different subject. But look at the closing here and look at the opening here. It's a sudden jump. It's like 4%. Okay, it's like a gap up opening. Although it's a very strong day, but I chose to exit the stock. I will tell you the reason why. See, I bought it here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. See, after 11 days, after I buy the stock, I'm still at break even. See, that's not a good sign. Okay, for a good breakout stock after 11 days, which is more than 2 weeks, right? Within 2 weeks, you should at least end up with a double digit return 10%, 15%, 20%, maybe 30, 40%. There are some stocks like you remember HPL Electric, I made a video on that. 37% in 2 days. Then there was Chennai Petro, 16% in 2 days. Okay, Zomato, 16% in 2 days. Okay, here it's like I'm in the third week after I buy the stock and I'm still at break even. Okay, that is not a good sign. That is not a stock that would most likely to give me good returns in the future. So I decided, okay, I'm done with this stock. I'm going to sell. So I sold at break even and just got out. Okay. So I see the stock is still nowhere near my stop loss. So I could have held on to the position. But I want to release my capital from such a stock and deploy that capital to somewhere else, stocks which are displaying high relative strength. So that is the reason why I got out of this stock. So I hope you understood what I was going through. What I would say in summary for this video is my purchase itself was incorrect. My buying decision here itself was wrong. Okay. I should have bought somewhere in this area. Okay. The green zone is the best buying area. The blue zone is the next best buying area. If the buy point is in the green zone, I'm okay with 4 points in the base. But if the buy point is in the blue zone, okay, maybe 6 points would give me the confidence to put the trade on. Okay. Thank you so much. If you have any questions or comments, let me know.